Welcome back. Let's talk about some earnings reaction. L&T is the first stock on our radar. It's a good set of Q2 earnings. The order inflow is robust. The management has reiterated the order inflow guidance of 12 to 15% for the full year. The stock is now recovering from the day's low and is right now absolutely flat. Vivek is here with more details. Vivek?
That's right. In fact, the company has reiterated the order inflow guidance of 12 to 15%, and most likely the management has indicated that it would be at the upper end of the band where they would settle at the end of FY23. Now, we spoke to the management, and some of the key takeaways in terms of what exactly the management has highlighted to us in our conversation. One of the worries as far as these results were concerned was the softness as far as the core EPC margins were concerned. Management indicated that commodity prices were a bit of a negative surprise. In fact, they were targeting around a 9.5% margin band at the start of the year. That is something that the management has indicated might be a little tough to achieve. Still, they are on track given the fact that commodity price environment at this point of time is quite soft. However, they believe that FY24 onwards, margins will see a significant rebound. They also spoke about the road assets, on track for the targeted divestment. This quarter, Q3, is when they expect to go ahead and sign an agreement with a buyer. They've already identified a buyer, is what we understand. They expect this divestment to happen at the end of FY23 and maybe a month or so delayed because of the multiple approvals that will be required. Talking about the Hyderabad Metro, some progress in terms of ridership trends, some progress in terms of being able to reduce debt quite significantly. However, divestment may be pushed out a year or two is what the management indicated to us. Very importantly, in terms of ROE, on the back of multiple divestments that will happen, and also on the back of targeted improvement in the cash flow, they expect ROE annual increase of around 1 to 1.5%, and that is something that's quite important to track as far as L&T is concerned. Brokerages continue to remain bullish. Macquarie did highlight that the margin decline from elevated commodity prices and project mix not being very robust this particular quarter, and also the one-off project closures is something that impacted the margins this time around. CLSA continues to believe margin visibility will improve from fourth quarter of FY23, and HSBC is saying that the divestment of ROE dilutive businesses like road concessions as well as thermal power is something that going forward will improve the ROE.
Okay, thanks a lot for that. Well, Tata Steel is the other heavyweight that's losing in trade. It was a disappointing set of numbers that came through from Tata Steel. Nigel is here to give us the latest on that. Nigel, over to you.
Well, that's right. It was a disappointing set